The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Webner. Webner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 9th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. I love this tool. I know you will as well. This is a tool I call Creating Transformation. You know, the key to making life really unique and worthwhile is to share. Sharing has a certain unique magic of its own, and here's what I've learned in sharing ideas. You've heard this before. If you share an idea with 10 different people, they get to hear it once, and you get to hear it 10 times. So by sharing, you're getting even better prepared for the future. Share ideas with your family. Share ideas with the people around you. Share ideas with other employees, your colleagues, everyone that you possibly can, because by sharing, 2 things happen. Now, I don't know really how to explain it, but I do know that it happens, and I don't know all about how it happens or why it happens. It just happens, and it's this. If you share something with someone else, they could be transformed. Think about that gift. They could be transformed. You may have dropped in at the exact time. This may be their moment, their magic moment. Picture this. They've got 3 numbers dialed in on their lock already, and if you share your idea well, if you share it right, you'll be that 4th number that can dial into the lock of a personal experience, and voila! The door will open and present an opportunity never seen before with that person that you just shared your idea with, an opportunity that I call transformation. And guess what? You and I, we are always looking for transformation. Transformation for today, tomorrow, this month, next year. We're always looking to be transformed. Picture this too. The caterpillar one day says, "I think I was made for more than this crawling on the ground." So the caterpillar climbs a tree, attaches himself to a leaf, and spins the cocoon. Who knows what disciplined effort it takes to spin a cocoon? But something inside that caterpillar says, I was designed for something more than being just a caterpillar. And then when that cocoon is ready and it opens up, out comes a butterfly that flies away. Maybe singing that song, "I believe I can fly, I believe I can touch the sky." You know that song. Look, the caterpillar says, I used to be a caterpillar on the ground. Now I can fly. Each day here at TFNN, we're offering you such a metamorphosis, an opportunity to learn new skills, new things, and maybe the language we speak is difficult to learn at first, and maybe at times it even seems awkward out there. But this is how transformation arrives, folks. Transformation, that's what it's all about. So if you're transforming yourself into a market technician and you need some assistance, just give us a call at 877-927-6648. I'll do everything in my power to provide you with that. We'll call it that fourth number that unlocks the key to your door of transformation. Well, let's go check out these markets. They're always transforming themselves. Let's go see what this morning's transformation is all about. Right now, we've got the Dow futures up 61 points out at 15,221. S&P futures up almost 9 at 1644 and a quarter. NASDAQ futures up 16 and a quarter at 2975. Russell 2000 up 5 out at 1012. Russell 2000 trying to break out here. King dollar up 12 ticks. You've got the euro back 20 ticks right now. Kind of the British pound getting a little bit of pounded here this morning, back 85 ticks. We'll most certainly take a look at the currency market as well as the metals market. You've got gold up $13 right now, silver up 14 pennies. Light sweet crude just taking a little bit of a rest here, off 41 cents right now. If we take a quick peek over in Europe, see what we have going on out there. Big party going on for a second day in a row. We got the DAX up 1 3/10% right now, up $105. The FTSE up 1%, up 67. Over in Asia last night, nothing but green arrows out there. You had the Nikkei up 363, the Hang Seng up 100, and the Shanghai up 7. Again, our call number 877-927-6648. Let's begin by taking a look. Let's go look at the daily chart here on the ES Mini out here. Let's go see what we've got going on. Right now, yesterday, we went ahead and drew this pattern in here, and the pattern that we're looking at is potentially the next Gartley sell out here. Right now, you've got the ES Mini trading up towards the top of its session out here, and it's going to go attack the 1649 level. 1649 is at June 19th. Swing point, it is where the downdraft began. If you get a close above 1649 today, that sets up a move to 1657-ish. I would say 1657 to 1663, right in that range. You've got your 0.786 retracement. That's coming off of your May 22nd high, as all the way down to the June 24th low out there. And as well, you've got a 2.618 expansion of your B to C swing point. You'd also have a completed A to B equals CD. If you want to see what that looks like on the way up, you're taking a look at a point of your June 24th low in the ES Mini on the daily. That's 1553 and a quarter. Your B point is the swing that came in on July 1st. That price, 1620.50. Just a slight pullback for a couple of days down in that July 3rd level, 1594. 1-to-1, A to B equals CD, takes you to 1661. So you got, in essence, three patterns that are going to form somewhere in that 1657-ish range, but it's got to first clear the 1649 level. Now, what it's doing right now is it's trying to attempt to get into the low of May 22nd, which is 1646.50. Not up there yet, but I do suspect that what we will see is we will see that occur. If we take a look here at the 30-minute chart, yesterday we were looking at the Gartley, or the butterfly, talking about cocoons and butterflies and caterpillars. We had a butterfly pattern that had completed out here, 1.618 butterfly pattern. That also, we saw the market pull back just slightly. What we also had unraveling here, not unraveling, but forming, was an A to B equals CD up. That was coming off of the low at 4:30 a.m. on July 3rd out at 1594. That was your A point. Your B point came in here at the price level of 1630.75 at 9 o'clock in the morning on July 5th. We had that jobs report sell-off down to a low at 10:30 at 1608.25. That set up our C point. 1-to-1, A to B equals CD. The exact number, 1645. And what we saw take place here at 4:30 this morning was a hit of 1645. Then we started to see the bears show up a bit. Of course, if we're taking a look at the bottom of my screen, we're utilizing that relative strength, relative weakness indicator. We saw the market get into the overbought territory. You know, when you get into an overbought territory, you should start looking for a market to work that condition off, either by moving sideways or pulling back, or a combination of both. In this case here, what we saw was the market start to pull back. Not really much of a retracement. Quite frankly. In fact, if you take a look at it, got down to a low of 1639. If we were going to take a look at even the smallest of retracements, you would probably come off of the swing point here at about 1:30 in the afternoon yesterday. So if we just take a look at that just to see what kind of retracement we had from the 1640, you can see just a 0.382 retracement. Now, 0.382 retracements are really great tools, and the reason that they're a great tool is that it helps you to understand the trend that is in place out here. And so I'm using that as our swing point, coming in yesterday about 1:30 again. And so we've got a strong trend. You've just completed a 1-to-1 A to B equals CD. You worked it off a bit by just simply moving back, by moving sideways, and now you're ready to go ahead and take that level on. So here, this sets up, if we go ahead, actually I can put a different A to B equals CD out here. Let's take a look at that didn't work. Let's see, I think this one will do it. We take a look at what the 1 to 1.272 on the 30-minute chart, that takes you up to 1655. So if we go put that together by going back and taking a look at the daily chart, 1655. On the 30-minute, you've got 1657 as your 0.786 retracement on the ES Mini. That is where she is headed to. Now, it's got to get over that 1649 swing point out here from June 19th. So that is the resistance. So just means put your seatbelts on just for a little bit out there. So that's on our ES. Let's go see what's going on in the currency marketplace out here. In fact, let's take a look at, give me a moment here to go ahead and pull this back. One of the charts that we do take a look at, or I like to take a look at because it's a currency pair that best tracks the U.S. stock market, is the euro-yen. And if we take this 120-minute chart on the euro-yen, I'm going to put it on a 120-minute chart as opposed to the 30, just simply because there is a Gartley sell pattern that has formed out here. Can you see it just simply by taking a look at the stock chart out here that you've got on my screen? For those of you that are listening in on your radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always catch live stream of this on that device by going to the home page of TFNN.com. On the right-hand side, you will see a little button with 3 smartphones. Click on that. Or you can always catch the archive of this show on Channel 9 out here. And if you go from the swing point high to the swing point low, that should stick out at you real quickly here. Swing point high coming right in here at the session of about 11 a.m., that level being 133.78, 11 a.m. on May 22nd. Kind of matches our market. How about that? Our market high, May 22nd. Now, if we go from that high all the way down to the low that was put in here, and that low that was established was at 1 p.m. on June the 13th. What we'll see here is that the retracement from the now the low back up to the high here, it's made just a little bit over a 0.618 retracement. But that's important because what you're looking at, you've also got an A to B equals CD, or very close to an A to B equals CD. So a Gartley pattern needs a it doesn't need a retracement. What it needs is an A to B equals CD. We love those Fibonacci numbers because when you can get all that to come together, that, folks, gives you an area where you should have some either strong resistance, in this case here, because it's a Gartley sell, or on a Gartley buy, you'd have some strong support. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Before we went to break, we were taking a look at the 120-minute chart on the Euro Japanese yen, and it doesn't really matter what chart it is that you're looking at. These patterns work the same on every chart, every time frame out here. So what we're taking a look at, if you take a look at the Euro Japanese yen, you figure at the high that was put in here on May 22nd, and you watched it move all the way lower, and you were saying, I really wanted to get in on that action, on that move lower. The great thing about the Gartley pattern is it just simply allows you a higher probability risk reward to be able to get in on a move up. In this case here, you're just looking for a retracement up, and you're looking for an A to B equals CD. So if you just simply come down to the A point here, that's going to be that 11 o'clock session on June 13th. That price level, 124.95. Your B point on this is going to be the retracement up into 5 a.m. on June 20th. That level was 129.888. All the way down makes a retracement. Looks like probably about a 0.618 retracement out there, down to the level of 126.56. That was at 1 p.m. on June 26th. Now we can see the 1-to-1 A to B equals CD has not completed exactly 131.48. But remember, we're using this as really a range out here. If we take a look at the Gartley pattern, now what I always also like to do is take a look at that B to C swing point and take a look at, you're looking for expansions. You're looking for 1.272. You're looking for 1.618. And you're looking for those because those are the Fibonacci ranges, the numbers that are going to give you the idea to come up with ranges for where you're looking for the market to actually turn. What you can see here is that you had a 1 point, or this currency pair, Euro Japanese Yen, had a 1.272 expansion at 130.79. It made just a slightly higher high, got up to 131.03 out there. So at this stage, either the Gartley pattern has formed or is getting very close to forming out here. Now, if we just draw that in, we go ahead and colorize it, with the little color tool that I've got out here, and makes it all nice out there. What we'll see here's your Gartley sell pattern. Now, what's important about that is that this pattern here, any Gartley pattern, your first objectives are going to be a dead cat bounce, and that's going to be of your A to D point. So if we go take a look at that, your dead cat bounce, A to D, that would be your 0.382 level. You can see that level was hit perfectly. I mean, almost as exact as you can get. If you take a look at the actual bars out here, you can see as the 0.382 level was being hit, you got a nice little reversal candle pattern here, little morning star that took place between the 5 a.m. and 9 a.m. because we're on a 120-minute chart out here on July the 5th out there. Then what do you expect? You expect a bounce. And what's that bounce? Now, the ultimate not the ultimate. So you've got at least two objectives of any type of Gartley pattern. Number one, you're expecting to see that dead cat bounce. And then from there, you're going to let people off of the elevator, and you're going to see some type of retracement. You're looking for this to actually move down into that 0.618 level. So inside the Euro Japanese Yen, you're looking at 127.30. Now, when it gets down that 0.382 level, if we go take a look at from the swing point high to the swing point low, what we're going to see is that what has transpired here so far is a move up. First, it was to the 0.618 level, just kind of hung out there. And then what it did here this morning at 3 a.m., made a move up into that 0.786 level at 130.56. So it looks like the work to the upside on the Euro Japanese Yen is done. And if that's the case, with the markets moving higher here today, what we're going to start to see is the divergence between the Euro Japanese Yen and our markets out there. And that's very important to note because this currency pair tracks the U.S. market better than anything else. And when you see divergence, what's going to happen is going to be the currency pair that actually wins out here. So we're seeing this pattern unfold, and it's important to be paying attention to. If we go check out what's going on here in the pre-market with regard to earnings releases, we had Alcoa out with numbers after the bell last night. We went and looked for clues on Alcoa to see if anybody knew what was going to happen. Alcoa right now trading up 1%. And if we go take a look at that, the clues that we saw inside Alcoa were what? They were a hammer candle, and they were two butterfly patterns that were out there. Two beautiful butterfly patterns off at different swing points and giving us a 1.272 expansion as well as 2.618 expansions of our B to C level. We saw that hammer come in here on July the 5th. Right now, you've got Alcoa trading up at about $8, $8 and a penny. So, it's really only up 9 cents out there. But the whole point is that we had these expansion, these butterfly patterns out there. We then got the bullish candle signal. You don't think that the market knows ahead of time what may be coming at us? That's why I say it's very important to be paying attention to that Euro-Japanese Yen currency pair as well. WD-40, they got some oil, some good oil in their earnings numbers right now. They closed at 57.65. They're trading up at 63.50 right now. That's up 10%. We'll take a look at WD-40. We'll take a look at Wolverine Worldwide. They're up 8%. And you've got High-Tech Pharmacal. They're down 7. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 72 points, trading out at 15,297. S&P up 9 at 1649. Composite up 12 at 3497. Russell 2000 up 4 points at 1013. Google's up 4. Apple's back 260. Microsoft up 20 ticks right now. Intel off 2. Cisco up 20. Leading the charge the upside this morning. We've got Netflix up $6. That's up 2.5%. Google just behind them. Wolverine Worldwide. WWW up about 370 right now. Tesla Motors up 2.25. BHP Billiton up $2. Goldman Sachs up $1.59. HomeAway up $1.53. To the downside, getting crushed this morning here, and I'm going to assume with volume. Intuitive Surgical, ISRG down $79 right now. That's off about 16%. Just behind them, also getting crushed, Ixia. XXIA. What is it? XXO is loves and kisses. Well, XXI apparently is no loves and kisses. Down 22% off $4 this morning. IBM down $3. IBM came into the downdraft little gap yesterday on lighter volume and failed. So we'll take a look at IBM. Apple's off $3. Our call number 877-927-6648. We've got up on the chart here, Alcoa, again, if we take a look at Alcoa, it's got those two butterfly patterns out here. So what should one expect if you were trading Alcoa out here? What you would do is you'd simply go from the swing point high, the A to D point, so you'd be going all the way from your May 9th level, $8.88, all the way down to the low that was put in here of $7.63. That was on July 3rd. I'm not suggesting that you take this trade, but what should be the expectation? Well, the expectation with the butterfly patterns coming in with that hammer candle, you should have good support at 763, and you should expect an outcome of a move eventually up to about 840. Right now, trading at 789. It's been actually selling off ever since it opened up. But that is on Alcoa. Let's take a look at some of these other stocks here that were out with earnings. How about WD-40? Their ticker symbol, WD. FC. So they got a little bit of gapping up here this morning and on nice volume. Let me switch over to another tab here. Let me see what their numbers were. They generated $93.1 million in net sales versus $87 million from the year prior. So they're doing well there. Let's see if I can find their net income was $10.2 million versus $9.14. So beating everything and gapping up. Let me put this on a longer-term chart out here. This could be at all-time highs. It most certainly is. And this is on WD-40. If we take a look at on the monthly chart here, the A to B equals CD. You come off of your March 9 low down at the 2181 level. That'd be your A point. Your B point would be up at July 31st, 47.97. Does a retracement for 2 months. Gets down to the low on September, or during the month of September in 2011, down at 35.37. We're seeing it right now come into and complete the 1-to-1 A to B equals CD this month, but doing with a wide-ranging bar. So when you come into a D point with a wide-ranging bar, what does that set up? You got it. The move to the next level. Looks like WD-40 wants to get up to $68.73. It's at $63.59 right now out there. So that's on the monthly chart for WD-40. Let's go take a look here at Intuitive Surgical. Intuitive Surgical gapping down. Look at the big volume. This is a daily chart. So far, coming out of the tanks here, you've got 855,000 shares. That's taking on a B point now. This could be, let me pull this back a little bit further here. It's taking on the swing point. This was a high volume low out here that was not tested. Well, it didn't get tested here this morning. It just blew right through it. And that low was from March 15th, and that level was 455.18, 2.5 million shares. Well, that's going to get crushed today. Let's actually go ahead and put Intuitive Surgical on a little bit of a longer-term chart. We can see that what it's trading into right now, or trading towards, has not gotten all the way down there, is this little breakaway gap from the time period of October 19th, 2011. 1.4 million shares there was what it broke away with. So it's coming back into that area, extremely hot. So expect that area to be its target, one of its targets. You already got 890,000 shares. The top of the gap, meaning the candle from October 18th out there, is the 391-ish level. Well, let's put this on a weekly chart out here and take a look at a larger patterns that may be forming inside Intuitive Surgical. Boy, does that look nasty here. Intuitive Surgical at least had a little bit of a consolidation going on, and we'll just blew through that. That's at the swing point low from March the 15th on the weekly chart at that 455.18 level. So as we take a look at where the next swing points are inside this, Intuitive Surgical should come back into the 320-ish area. That's where that takes you back into August of 2011 out here. If we take a look at any trend on this equity here, just take a look at the trend line coming off of the time period of March of 09 out here. You can see it broke that trend. Well, actually, it broke that trend. Well, I'm sorry, that line was a little bit off. Let's go ahead and make sure I'm using the low here, which is on March 6, 2009, the week of March 6th. The low here was 84.86. That's your first touch point. Your next touch point is going to be in that November 26, 2010 level. And what we can see here is that trend lines are important. We'll go back and take a look at the S&P 500, I'm sure, at some point during one of these shows, and one of the 2 hours here. And if we take a look at this trend line, the trend line was tagged. In fact, the trend line, for whatever reason, as well as the swing point horizontal support from July 27, 2012, held. And so we see that Intuitive Surgical is really just dancing along that trend line here. So it was still bullish up until today. And today it has broken through that trend line. Now, when you break a trend line, eventually you typically will go back up and test that. 400.06 is nothing more than the dead cat bounce That's a 0.382 retracement coming off of the March 09 lows all the way up to the high that was put in here. The high inside Intuitive Surgical is April 20th, and that is 594.89 out there. But looks like more, so that it'll come into the, quite frankly, it should make a run down to your 0.618 level around 279. As far as A to B equals CD patterns out here, we come off of, or I would at least come off of, we'll make it the easier one, and that would be coming off of the high out here from February 1st, 585.67. Your B point, which is being taken out here this morning, that's your 455.18 low from March 15th. And it looks like the high would have come in right about, we're going to use the candle right here of June 14th. 1-to-1 takes you to 383, but 348.61, is really the target. So again, the target here, at least initial target, is going to be the swing area around August 26th, somewhere in that 320 to 357-ish level. That's on Intuitive Surgical. Looks pretty bad out there. Let's see, what else? We had Wolverine Worldwide. They were out with numbers that gapped up this morning. Let's go check out Wolverine Worldwide. I know I can get it out of here. Let me see what they actually posted. They did revenues here of operating profit for the year, $88 million versus $59. So a nice job there. 6-month revenues, $1.2 billion versus $635 million. Boy, that is a nice big jump out here. WWW is the ticker symbol. So gapping up this morning. Let's go take a look. It could be at all-time highs as well. Let me put this on a longer-term chart pattern as well. So we got this on a weekly. And on a weekly, let's go check out its A to B equals CD. We're going to do the same thing here. Coming off of the March 09 low. Inside Wolverine Worldwide, that would be a level of $13.15. That's your A point. Your B point is the swing from July 8th. 43.36, July 8, 2011, makes a retracement down into August 19th of 2011 out at 30.77. You can see the 1-to-1 is where it's headed towards, $60.96, we'll call it $61. So far it has been able to hit an intraday high of 60.35 or an intra-week high of 60.35 out there. But it's coming in there. With a wide-ranging bar. That would say that in the case of Wolverine Worldwide, what it really wants to do is try to get up into the $69 area. That's on your A to B equals CD on the weekly chart for this equity here. Volume here today so far on this move up, it's got 208,000 shares. Yesterday did 488, so it's going to have some decent volume in this. The problem is that if this thing ever does fall out of bed, the first level that it will fall down to is a price of $45. So that would be a pretty big knock. So if you're in this thing, just make sure you've got a good stop in place here. It shouldn't fall out of bed now that the earnings are out of this thing, but you want to be careful out there. What else do we have out with numbers? I think there was one other one. It was High-Tech. HITK is the ticker symbol, High-Tech Pharmacal. And let's go take a look and see what they report. As far as their equity right now, it's trading at 31.51, so it had gapped down. Let's go see what's behind their numbers out here. They did net income of $16 million versus $48 million from the year earlier. How about that? That's really taken a hit. And they did earnings per share of $1.19 versus $3.59. I'm surprised that this thing is not being hit even further. Right now, it's traveling down. It's got a number of high-volume lows out here that are untested. The one that sticks out at me right now, just on the time frame that I've got, November 29th, and that level is 28.70. Got 1.1 million shares there. So it looks like that is probably one of the targets. Let's put this on a longer-term chart as well. Looks like it's been consolidating in here for period of about going back to April of 2012. So, almost 12, 14 months out there. Let's go take a look at a weekly chart on this equity and see what we've got here. So you can see the consolidation that we're using, or that I'm visually taking a look at, really just coming off of the swing point high here from March 30th, 2012, right around the $38 range. We'll go ahead and put a black line across the screen on that. And then the lows of the consolidation right now, I would say, really about right here, which would be we'll call it the area of about 28.70. So we're going to say $29 up to 38. So what do you got? You got a $9 consolidation. So whichever way this consolidation breaks, you're going to be $9 to the other side. Now, A to B equals CD. It's got the A to B pattern already formed out here. And for this, I would go ahead and use the high from December 9, 2011, 44.58 as my A point. My B point is the June 8th level, 27.36, June 8, 2012. And your C point somewhere right around the February 1st, 2013 area. Again, it's a weekly chart that we're looking at. Right around 38.07. 1-to-1 A to B equals CD down takes you to $20 and change out here. We said that the $29 area was the bottom of the consolidation. Take away 9 from 29, that gets you $20. So $20.85. That's where it looks like this wants to head to if it can break the consolidation level. And a break is going to be getting below 27.36 on with some volume out there. That will then set up a test of this high volume bar right down here, this low, as well as the breakout session, which is right here from September 11, 2009. So that's somewhere around the range of 22.65 down to a level of 16.24. That is on high-tech pharmacal. Let's go take a look at other things moving in the markets out here. Let's take a look at gold and silver. Let's look at some of the commodities. We've got gold trading up $18 right now. King dollar up 11 ticks out at 84.53. Gold here attempting to break out. What we're going to see occur here in gold and silver at some point in time is we're going to see a huge short covering rally. I mean, it's going to be a big one, and we'll see if if you get gold here above. Close above 12.67. That might start it. I would say certainly a close above 12.77.50, and then we're going to see gold move quickly up to the level of 13.21.50, and the key is going to be because that's the That's one of the that's a high volume swing point from April 16th that it broke, and if you get it close inside there, man, the short covering it'll be something to just like we saw the move down. We're going to see a move up. I don't know when it's going to take place, but we are going to see a huge short covering rally inside the metals. That's the way that things are set up. That's the way things are set up on the chart patterns. That's the way that things are set up in the commitment of traders data, which was released yesterday at 3:30 in the afternoon out there. So they're going to be trapped like rats when that short covering rally does begin. We go take a look at light sweet crude. That really is not backing off much out here. This ran into we know this is in a 14-point over a 1-year consolidation. So that says 114, unfortunately, is on the horizon in our future. And if we take a look at what light sweet crude did, was it made the 1-to-1 A to B equals CD. That's coming off of the bottom of the consolidation from April 19th out at 87.56. That was your A point. Your B point out here was on the trading session of May 6th. That was 97.17. Made a pullback down and really formed the rising price channel that it's traveling in. That was on June 3rd out there, out at 91.26. So it completed the 1-to-1, went ahead and tagged the top of that rising price channel, and all it's done is just backed up just a tad here. In order for light sweet crude to give any kind of bearishness to it, in my opinion, it's got to get it closed below that bar from July 5th. And that's going to be, we'll use just the open, 101.09 out there. And then it should find some pretty decent support out here at the top of the consolidation level, which is going to be right around the $99 mark. So, again, that's light sweet crude not backing off much at all. 877-927-6648. Dow's up 72. S&P is up 8. And the NASDAQ up 10. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Now up 78 points right now, S&P up 9, and we're going to go take a tour around the world. Let's go take a look at the DAX, see what the DAX is doing here in Germany right now. It is trading at 8070. It's up a total of about 1 3/10%, up 101 points. Now, what the DAX is doing here right now, it is testing its breakdown area. It's the bottom of the breakdown area. That's the June 20th high. I'll go ahead and put a black line across the screen out here. And what we can see is the number on that is 8085.67. It's gotten up to 8086. 12.95 out there. So we're seeing a successful test of that breakdown area. The question is, will the DAX try to get into the gap? Will it stay in the gap and actually make its way up to where it really broke down, which was June 19th, and that low is 81.60. But we're going to start taking a look at markets that are coming into harmony, so it's going to be important to be paying attention to the U.S. market, because all the DAX here is now done, is made its way back to where it broke down, which would be a normal test out there. It's above the 0.382 level. That most certainly says, and I don't have the volume in this. If I had the volume, what we would be doing is we'd be comparing it, benchmarking it against two different things. Number one, most certainly the gap down there, and I suspect it does not have the volume compared to that June 20th level. But we want to be paying attention here to June 28th out there and see what the volume is on that June 28th candle. The high there is 80.37, because that could set up a small little A to B equals CD up. That would look like this. That would go ahead and take us really a 1 to 1.272 would take us right into the 0.618 area, and that would set up your Gartley sell inside the DAX. I'm not saying that's the pattern that's going to unfold here, because it most certainly has, give me a second, I'm going to erase the A to B equals CD tool out here. And you can take a look at the Gartley pattern that would actually form here. So I'm not saying that's going to happen, but if it did, it would set up a really nice Gartley sell pattern. Now I'm going to go ahead and explode this up on the screen. You might say, well, what do you mean by that, Steve? Well, I love patterns where we can see these Fibonacci numbers come together. And the Fibonacci numbers that we're taking a look at here in the DAX, if you take a look at coming off of the high from May 22nd, from that high of 85.57 all the way down to the low on June 24th out at 76.55. Your 0.618 retracement takes you right to about the level of 82.17-ish, 82.13, somewhere right around there. If we take a look at our B2C, that's going to be the swing point of June 28th. So from that high, 80.37 down to the low on July 3rd out here at 77.30. If you take an expansion of that, your 1.618 expansion takes you up to that exact same level, 82.17, 82.13. So now you've got a 0.618 retracement, a 1.618 expansion. Take a look at this retracement here that was done at the low from your June 24th low to the low that was put in here on July 3rd, a 0.786. So here is ideal Fibonacci numbers. The nice thing about utilizing these leading indicators is ahead of time you're able to draw the pattern. So you can draw these patterns. You can have those numbers written down on your chart, on your screen out here, and you know what your targets are. Now, the DAX has got to absolutely get through the area where it broke down at, and I don't know whether or not it's going to be able to do that. We have a test of that. I suspect it's on light volume today, and so this pattern here may not unfold. The pattern that may unfold is nothing more than a test of coming back to an area where it broke down, and that would be setting up a very large A to B equals CD down, because in essence it's done just slightly over the 0.382 retracement, and if that's all that it can do, that sets up one huge move to the downside. So that's on the DAX. Those are the two patterns that are in play here right now. If we take a look at the Nikkei, all the Nikkei did here last night, just an inside day, even though the talk of the town was the Nikkei was so strong, it was up 2.5%. An inside day on that key reversal session. Folks, stay tuned. The Money Master Show is up next. If you're off to start your Tuesday, have a terrific Tuesday, and I look forward to seeing you tomorrow morning. Take care, folks.
Well, it's always better when we're